Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this review, I'm going to teach you one of our most favorite setups, and that's called the Bearish 1-2-3 continuation using Master Trader strategies. Let's begin. We are technical-based traders. Our approach starts with a compelling setup. No setup, no action. Then we take that compelling pattern and we see where it is in connection with the overall trend, support, resistance, multiple time frame analysis. Is it showing relative strength or weakness? What are the broader market and internals doing? Then you simply enter and manage in between. That's all trading is about. These are all just very simple red and green candlesticks, all showing you in and of themselves very bullish setups. And then you take this picture and you go back to the prior slide and apply the other Master Trader concepts to determine whether you have a high probability setup or not. In this trade review, I'm going to teach you the bearish 1-2-3 continuation. All of these apply to any time frame and equally to the bearish side. But let me define it in the bullish 1-2-3. We have a wide range fat green bar. Just eyeball it. It'll jump out at you. It's a wide range bar relative to the other bars with little to no tails. Then we want that to come from a consolidation or some type of continuation pattern with a price void. Price avoidance means look to the left for longs. There should be insignificant resistance. A bear 1-2-3, insignificant support to the left. I want one or more inside bars that stay in the upper third of this. That acts as a continuation of the strength suggested by the igniting breakout bar. You buy over the highs, initial stop under the low, manage in between per your trading plan. Last week, I'm starting with the Qs here to kind of put it in perspective of our market bias. So we had a big run, then all of our charts are very simple red and green candlesticks. On the daily, the red is a 200, blue is the 20, green is a 50 period moving average. So you can see they rolled over. And so here we traded the bounce. Our market internals gave us a bullish signal. We traded the bounce and we just said, let's see how far it's gonna go. And then I put a little inflation thing here. This negative gap down and negative wide range bar closing at the low. This happened on the negative CPI number. So the markets are concerned with inflation and the Fed's raising interest rates to fight that inflation. So we had 1, 2, 3, 4 bullish bars get totally annihilated in one day. That's bearish. Now I have my bearish inside bar that stayed in the bottom 1/3 of this wide range bar. It is on support, I see that, but because of this overall pattern in a downtrend now, and I have a price void to the left. So if this cracks, as it did right here, my target initial target is somewhere these prior lows over here. So we entered in this particular trade, we gave our subscribers a bearish option trade called a bear put debit spread, where we buy one in the money put, sell an out of the money put to make it cheaper. And so we did that here. This is a closed trade, and we give these new trades during the day in Telegram, so they're instantly appear on your phone. New trades and trades adjustments. This is a closed trade, and this is the format in the spreadsheet in members area. So using options here, and we got out into 3 different lots into weakness. You can see here, a 5-day beautiful swing trade made almost 40% return using options. And that's why we buy options when they're liquid, as they are obviously on the Qs. Then we have leverage and limited risk. So these were all the same week, so you can see we had a bearish bias. Here's another 1, 2, 3. Let's start with this green bar, and that's why I'm showing you this little shock guy. That was actually what we call a bullish Master Trader buy setup at the 50 period moving average after taking out a prior low and having a beautiful range expansion bar. Over the high of that green bar, that was a compelling long setup. The very next day, that's what we call a 180 reversal. It's a big green bar followed by a big red bar. So it 100% negates the bullishness of that bar. Now I get the gift of an inside bar in the lower third. That is a 1, 2, 3 bearish continuation breakdown. After a 180 closing breakdown, and you see this big momentum move up, classic example, it leaves a price void. There's no significant support. We just simply went into trail mode here. This was a 3-day trade, 8% return. Another one here, Costco, big topping pattern. You can see the 20 MA rolling over it all. This was what we call the tell, T-E-L-L, of danger, danger. This move might be coming to an end, particularly when we look at the broader markets and the sector. And then it put in a nice bounce, nice bottom here on the 200. It made the bounce up as the broader markets did. Now this one is worse than the Qs. Remember, the Qs closed right at support. This was a closing breakdown. So this is not technically a 1, 2, 3 because this bar was not an inside bar. But notice of how we described it. We described it as a wide range breakdown from a topping pattern, parentheses. While this bar was being made throughout the day, it was an inside bar. So had it closed an inside bar, that's why we say, if it closed here, because the day's not over, I have no idea how it's going to close. So it closed weak. We entered it under the wide range bar and just went into trail mode also. You see here, I move stop 504, locking in a couple dollar profit and just trail over a prior bar's high. One more here, RBA. These are all just no-brainer setups, and that's what you learn taking our Master Trader Strategies course as a technician, learning to objectively read anything that moves very simply using our approach. So here we another topping pattern. This is the tell, breakout failure, topping tail, closing breakdown. Now I have two inside bars where the second inside bar traded over the prior inside bar. So that's what we call a 1, 2, 3, 4. And then, so we gave this as a short under the lows, and it gapped under it. And so we either gave a 5-minute low or shorted a bounce. I would have to go back and look. But we shorted the stock and just went into trail mode. Made a beautiful profit there, 410 bucks, 7.5% return on capital. Go to mastertrader.com/education. This week we have a special using this coupon code options20. It was originally intended just for the option courses where we sell options and buy options like I showed you in the Qs above, but we also sell options as an income trade to take in that premium, which expires worthless using our approach, technical approach. But the coupon actually works for all courses. So you can take the Greg Capper's Technical Strategies course, which is a starting place for trading anything, stocks, options, commodities, with our technical-based approach. Hope that helped. As always, email Greg or me at mastertrader.com, and look forward to seeing you in the next trade review video.